Okay, hello and welcome to today's webinar, How Negative Interest Rates Ruin Your Retirement. Before we begin, I have to do some legal stuff, and I gotta tell you that I'm not providing any legal, accounting, or financial advice. I'm not a lawyer, so I cannot give you legal advice. I cannot give you any tax advice because I'm not tax person and not a tax advisor, and I cannot recommend you any stock, commodity, option, or anything else for that matter because I'm not a fully licensed bank in Europe. Please be aware that whatever we are talking about, every form of investment has some risk associated with it, so you should have a thorough research and look into it before you do anything. And with that being said, hello and welcome from sunny Cyprus. My name is Juergen Pallien, and this is my favorite lifestyle on a very busy day. So usually I hang out at some water, and I will tell you a little bit more about that kind of lifestyle in a bit. Before we begin, I would like to ask you, who of you currently lives in a country where you have negative interest rates at all? So I see some people here. Okay, there's one no, that must be Canada, and most other people from Europe seem to have negative interest rate. Oh, we got people from all over the place here. So South Africa doesn't seem to have negative interest rates at the moment. So majority of 63% are from a country where we already have negative interest rates. So thank you very much for that participation. And we will have a look at what that means for all of us that are affected by it. Being in Cyprus, in the Eurozone, we have negative interest rates.
Hi, my name is Juergen Pallien. I'm a serial entrepreneur, stock market trader from Germany, now living in the UK, and I'm the founder of 24-inch Profits.
Now, if you're watching this and you want to become financially free, then Juergen wants to help you.
My mission is to financially liberate 1 million people and make them financially free. Thank you.
Growing up in a poor family, his parents argued about money all the time. Juergen swore to himself to change his future, retired at the age of just 35 and became a millionaire. Then he had learned that you become rich by either owning a business or as an investor. However,
If you have to choose, take both.
Juergen turned to teaching about investing in the stock market, and his students love him.
Juergen is an amazing teacher because he never makes me feel like I'm stupid or an idiot or anything.
He knows exactly how to do things. We learned everything we need to know today, and I can't wait to start trading tomorrow.
The strategies even apply to 13-year-old Shane.
You're just amazing.
And 13-year-olds can do it. Why can't you?
Visit 24hprofits.com now.
Okay, that's something we please don't do because otherwise you would leave the webinar, and we want to go on with it. So something that I love to say is that if you don't know how to invest, you probably will never be able to really retire, or at least not in the lifestyle that you want to have and that you absolutely deserve. And there are several reasons for it. What I found when I speak to people all over the world is that they actually have two questions that are very common. First of these questions is, how do these negative interest rates affect me actually? Because you hear about it, but it doesn't seem to have an effect yet. We'll talk about that in a while. And the other question that many people want to ask is, how can I retire wealthy? And closely connected to that, how can I retire early and wealthy? And we will have a look at both of these things in a bit. So let me ask you another question. And if it works. Here we go. So who of you thinks that your government, wherever you are, in which country you are, will provide you with a pension or with some form of retirement scheme where you actually can live like you want to, or at least, let's say, decent, okay? Oh, that's very interesting. So 80% think that actually the government has no way of providing you with it, and 20% even think that they don't get a pension at all. Okay, so very interesting. You're in the right place tonight, because I don't think so either. Before we begin, we have to clarify why do we need to invest actually. And the very first thing, that's one of the things that actually the government does to us, as well as something that we call inflation. You can see the $100 bill vaporizing in flames, because that's actually what it is. And we have a second thing, and these are the countries that currently have negative interest rates. So you can see it spread all over Europe, in Japan and Greenland, if you take that as part of Denmark, because they are sharing the same currency. So these are the areas in the world with negative interest rates, and you can see that these are not the dynamic economies, and they are not the countries that are really getting a lot of growth currently. Japan is pretty much going sideways for nearly 20 years, and in Europe over the last 10 years, over the last decade, we didn't see a lot of growth at all, especially if you compare that to the United States or Canada, or the emerging countries like Brazil, like China, India, and all the growth that we can find there. That is really, really concerning in my point of view. So when we talk about inflation, let's quickly talk about what it is. Most people think it's an increase in price, but in reality, it's an increase in the money supply. And if you increase the money supply, let's assume you want to buy some flowers and you want to buy them. They are currently 12 euro, 12 Swedish krona, 12 Canadian dollars, wherever you are in the world. We just assume now that the price for flowers is 12. What happens in inflation is that the central banks, like the Federal Reserve, the European Central Bank, the Bank of Canada, Bank of England, Swiss National Bank, whoever it is, they actually increase the money supply. So when we think about that the money supply doubles, we will see that the price goes up, because now we have twice as much money in the world, but we still have the same economy pretty much. So actually the value of the currency needs to go down 50%, which means the prices for flowers will go up and they will double as well. So actually everyone will have more money, but the money will be less worth. And that's what we see on the other side, that prices are going up. So that's what we call inflation. And if you look at the current balance sheets of the central banks, they created trillions of dollars, euros, and yen, and they inflate the money supply extremely high. So the effect of inflation is higher prices, but actually, as we already know, is the money is losing value. If you think about the US dollar, for example, I think since the Great Depression, it lost 99% of its value. And we are doing very well in Europe to catch up on it. If you think about the prices for typical goods that you pay, we are definitely losing a lot of value. If you think about what you could buy in 2001 when the euro came into Europe and what you can buy now for the same euro, it's pretty ridiculous. And even before, when we changed from national currencies to the euro, it seemed that everyone is losing 50% of its value anyway. So that was quite a journey in inflation. Although they keep telling us inflation is just 1% or 2% a year. But the reality, when you have a look at what you can actually buy with the money you have, doesn't seem to reflect a 1 or 2% decrease year over year. Here's an example to think about for those of you that come from South Africa. You can closely relate to it. And in 1980, one Zimbabwe dollar was worth $1.47 US dollars. So you could actually buy nearly $1.50 with one Zimbabwe dollars. And then around 30 years later, in 2009, 100 trillion Zimbabwe dollar were 40 US cents. So great thing is everyone was a trillionaire. Bad thing is you had to have packs and packs of these 100 trillion notes to even buy some basic goods. And we are well on our way in other nations to do something similar. So once upon a time, nice little fairy tale, we could say that if we invest and we earn more than the inflation, we will be well off because we will make more money when inflation eats away, so we can buy more, we will become richer, we will become wealthier, and that's a great thing. However, that's a myth these days, and it becomes harder and harder. And here's the reason why. The second reason why we need to invest is not that we have a European Central Bank, or for the US and other countries, inflation goals are very similar, apart from South Africa, if we get that out. But UK, Sweden, Denmark, Norway, they all want to have a stable inflation of around 2%. So the European Central Bank wants to guarantee that we have an inflation of 2%. So 2% of our money goes away every year, whatever we do. That's the goal, that's the target for that central bank system. And that's very similar in most countries of the world. But that's another reason, and it's closely related to the European Central Bank. On the right side hand, you can see Ms. Lagarde, Christine Lagarde, former boss of the IWF, and now she is the head of the European Central Bank. This is her at the conviction for negligence of 400 million euro. So for some reason she didn't go to jail for it, but now she is predestined to lead the European Central Bank. Not sure what I should think of it, but that's a fact. And she has in mind that a great way to get out of national debt would be to raise interest rate to a negative 5%. So that's her target. She got voted as president of the European Central Bank. In Europe, negative interest rates recently went from, I think, minus 0.4% to minus 5%. Currently, I got a letter from my bank telling me, hey, you got a lot of money in your bank for everything that you have over 100,000 euro in your bank account. We want to charge you now 0.6% over the year, and we want to deduct the money every day. And first thing I did is that I spread the money on different bank accounts. So now that's gone, but that's not a solution for these negative interest rates, because sooner or later you will have to pay them anyway. So what does that do for us? We have at least a 7% or more loss in value per year if that will become reality. And we're doing everything at the moment to get closer to that. How does that affect you personally? One of the questions that people keep asking, because first of all, you don't have to pay negative interest rate, it's the banks that pay it. So here you can see how many billion each country pays for interest for their excess liquidity to the European Central Bank. So Switzerland, Germany, France, the Netherlands, Luxembourg, obviously all the countries where there is a lot of money parked have to pay a lot, so that's several billion. But the banks that have to pay that, they want to have that money back because their business is not to pay some negative interest rates for you. So they either do what my bank recently did here in Cyprus, A German bank did it already a while ago. And the only bank that didn't do it so far is my bank accounts in the UK. But they want to have interest rate from you. So if you are a saver, especially for retirement, when your income stops coming in because you retired, you need to have a lot of savings in order to live from it. So if you're now a saver and you want to retire and you save money, you're actually a loser because you have to pay that interest rate, especially if you want to retire wealthy and you have managed with a lot of work over your lifetime to put away a lot of money. They will just deduct interest, negative interest rates, so you have to pay the bank in order to have the money in a safe account, in a bank account, or in a safe or whatever. So that obviously will affect you. And it affects you in another way, even if you are not yet in that 100,000 euro or 500,000 euro space. They have different thresholds for it. You will be affected by something else, because when your bank isn't making any money, they will get the money from you one way or another, because they will just get more money for cash deposits, or if you had a free account, now you have to pay for your bank account. They used to be completely free in Europe for a long time, and now they start to charge more and more for it every month. If you do some wire transfer or any transaction, they will charge you more and more, and they will get the money from you one way or another. And here's what it does. If you think about it over time, because these 7%, that doesn't sound like a lot at first, but if you calculate it at, say, over a period of 10 years, if you want to retire at 65, I'm not sure if I want to do, because I already retired some years ago at 35, but if you would calculate it, by the time you hit 75, and that's not even an old age, people live way longer now, thankfully, than to 75, but your purchasing power for every 100,000 that you had would have gone down to 48,000. So you would have lost half of your money, whatever amount it is, by the time you're 75. And you couldn't just buy too much from it anymore. And that's really frightening if you think about it in the long term. And the only way that we know right now to get out of that dilemma is we gotta invest with something that has a return of more than 7%. If you think about what you get for cash money in your bank or any interest rate with any banking products, you're far, far away from 7%. So it doesn't really matter, it doesn't really help you a lot. And the 7% are only true if the if the inflation would really be 2%. And I think for many, many things that you buy on a daily basis, inflation seems to be much higher. Let's have a look which assets are affected. So we already talked about your savings. Their purchasing power or their value will decrease every year. So that's one thing that we already know. How about a second thing? If you think about a life insurance, which was a classical way time ago, at least in German-speaking countries, to save some money, and if you live to, let's say, 60, 65, that life insurance will get paid out, and they used to guarantee you that you get a 4.5% return on these life insurances, but all these things are not true anymore, so they stopped guaranteeing any payments, and your life insurance will become more and more expensive, and whatever you have in there, apart from taxation, which would also be another topic. So the government definitely will love to tax life insurances. They said they never will do that with pensions. Now we are taxing pensions in many, many countries, and it's the same with life insurance. And you just don't get any return anymore, because the insurance company, the job of the insurance company is they take your money, or they take the money of a lot of their customers, and they invest it in things, that's the theory, where we get a lot of money back. But with negative interest rates and with all these government bonds, some in many cases, government bonds of Sweden, even government bonds of Greece recently had negative returns. So the insurance companies are in many cases already losing money on your life insurance. So they cannot pay these things as they used to. So your life insurance is something that will lose value and where you actually shouldn't count on that you can retire once it gets paid out. We have another thing similar. If you have a private health insurance, for example, or if you have government health insurance, they both do something similar. They collect the money, they invest it, but as they don't get any return in that negative environment, they have to pay these negative interest rates as well. They don't get any money from their investments, and if they don't get any money from their investments, your health insurance costs will go up, and that has nothing to do with people getting older and we have more and expensive medicine, all these kind of things. It's simply that how it worked in the past, that you have a health insurance, they pile up some money when you're young, they invest it, and then they make money investing it, so they can use that money that they made over time in order to pay for your health insurance when you get old, like all these insurance claims. That doesn't work anymore. So your health insurance costs will go up. My private health insurance, what I personally had in Germany, that went up like 10–15% year over year. That's like absolutely crazy, which is why I switched to an international company for a while ago. And now that company, just to finish that, is a US company where you actually get some interest rate, and the difference is that the health insurance costs for me were cut to less than a half, and I could insure my wife for free, and I still pay only half of what I would pay in a country with negative interest rates. Just to demonstrate you on a little personal private example how big the difference can be. And this insurance also covers medical treatments in the US, which is something that my German insurance would never do because it's far too expensive. And so I get a lot more for half the price, and I have a second person covered for free. That's the difference in between getting interest and having to pay interest. It's absolutely huge. Now, we already said that negative interest rates typically go hand in hand with economic stallments. So that means if you're working for someone, that your wages probably will be stable, especially if you calculate inflation into it. So net, you wouldn't go up further, which means it gets harder and harder for you to get more money in and to save more, which you would have to do now in the scenario where you still have to pay for it. So economies, or typically all the countries that have negative interest rates, are not growing as much as other countries, and the wages aren't going up either. Now, what does it say about property prices? So as the interest rate goes down, there are more and more people that are now able to afford to build houses. Typically, property prices are going up in a negative interest rate environment. And if property prices go up, the landowner or the house owner, he wants to have a return. So if they rent it out, the rental costs for you will go up as well. So if you rent it and you have a longer period of negative interest rates like we are having currently in Europe, you pretty much can guarantee that your rental costs will go up, and they'll go up even higher than the inflation. Now, you could think that that is great news for house owners. If you have a look at it, if you are a homeowner, congratulations, that's at least something. But the increase actually between 2015 when we started and 2018 in the Eurozone, where we have these negative interest rates, housing prices on average went up 16% in 4 years. So that's 4% per year, and that's not even compounded. So it would actually be less. However, to keep things simple, it's 4% per year, but you have to get at least to 7. So even as a house owner, if you own it, that pretty much doesn't help you. So how do we get out of this? There's only one investment that we know that beats 7% year over year, and that's the stock market. I know that's very frightening for some people, because especially if you have never done something in the stock market, there are so many misconceptions about it. If you have a look at the historical returns with the S&P 500, and you can Google these things, so there are lots of studies, and you can see here the summary over 10 years, 20 years, 30 years, 40 years. Of course, it goes up and down, and there's some volatility in it, but eventually we have returns of 9.3%. And that's, if you don't know anything about it, you just invest in the stock market, and that's the only way how you can beat that inflation and negative interest rate combination over time. And there's nothing else I know of where you could invest into and make similar amounts of money without putting a lot of work in it. Of course, you can buy a house like a room, and you can refurbish it, you can build it all up, and you can do all the work yourself, and then you will get rewarded for the work you put in. But without doing anything, just as a passive investment, that's the only thing that actually beats 7%. So average return over 40 years, 9.4% roughly, and that's very similar over 10 and 20 years. We're still at 9.2%. So that's fairly consistent, even though we have things like financial crisis or other crises in there, and they are all in that average return combined. Now, these are two magic questions for you, because wherever you are in your life right now, if you're not happy with what you earn or how much money you have, or if you think you have to do something different, then the question is, are you willing to learn something new or try something new? Because obviously the things that most people were keen of so far, they are not working, as we saw earlier. And the second question would be, do you dare to be different and do something different? There's a nice saying in the United States that says something like, if you do the same thing than your neighbor, he will always be your neighbor. And in most cases, that neighbor is pretty broke, so you don't want to be in the same situation 10 years from now, 20 years from now, however long you have until retirement. And don't do anything different, because that wouldn't help you at all. So, how much money you are able to make in the stock market depends pretty much on the strategy you choose. You have different strategies that give you different results. We saw an average of 9% with the United States stock market, which I usually take because it's highly liquid. There's a lot of money you can put in there. And the US dollar is pretty stable over time if you compare it to other things. And another nice benefit, if you're from Europe and you're a little bit pessimistic about the euro, like me, especially after the United Kingdom leaves Europe, then one of the things that would help with is if we have another crisis in countries like Italy or Spain or Greece, and euro should fall apart or lose dramatically in value, that would be safe as well, because your money would be safely in US dollars. If the US would go broke, then you would have a problem, of course, but that's true for both things. So ideally, you do some risk management and you put it in different assets. But as the US is one of the best researched stock markets, you get the most data for that. That's why I typically stick with this one. Now you have a lot of people that come and tell me, yeah, but the stock market isn't that a casino, or it doesn't work, you need money to make money, you lose, it's all a scam, it's too good to be true, how can you make 9% in a year when other people only get 1% from the bank, that's impossible, that's not true, that can't be true whatsoever. Just a little heads up, if you would have invested in the German markets last year, you would have made nearly 30%. If you would have invested in other markets, international markets, you could have made even more. I think US markets were up 33%, Germany like 28 until the end of the year, and other markets very similar. So it's absolutely true, and it just takes one search at Google to verify it. But there's still a lot of people that tell you how dangerous it is and that it will never work, and yeah, that you have better chances in a casino or whatsoever. So that's something you hear a lot. Now let me tell you a little bit about me so you get to know me a little bit better for those who never heard of me. Where I grew up in Germany, that was a very poor environment. That's like a little village. And when I was young, my parents didn't have any money and we were always arguing about money, and they were yelling at each other. And when they were not yelling at each other because they were done yelling at each other, they yelled at me because I was the only one around, at least until my sister came. But my earliest childhood memories are my parents yelling about money. So I decided at one point, I never want to argue about money, and the only way how I can be sure that I don't have to argue about money is make a lot of it. So that's what I was looking for, and I looked around me and I found different people that were business owners, small business owners. So we had like 2 or 3 butchers in the village. We had some bakeries, we had a sawmill. And the owner of these businesses, so business owners, they were typically the people with the new cars that were set to have money, that were going out for dinners and all these kind of fancy stuff that we wouldn't or couldn't do. And the other one was part a little bit outside of the village on the top of a hill. That was a new built area. And in one of these new builds, like a back then it seemed to be a big mansion, but it was like a bigger house than the rest of everyone had. There was a football player living that made a few millions playing internationally for one of the German football clubs. And he had an interesting concept because people were telling that guy, he lets his money work for him. And I thought, yeah, that's a great concept. So I would love that. So I went back home to my parents, my dad, and I suggested that he should do the same thing. So he has a bit of money. So if he takes the money and lets it work for him, he has more time to play with me. So I was around probably 4 or 5 years when I suggested that. So he wasn't too keen on it. So I don't know exactly anymore what he said, but he found the idea pretty ridiculous. However, that idea was fascinating me, and I saw it later on in my life that if you have to choose, take both, because I want to be very, very sure that I'm able to afford whatever I want. I don't want to argue about money. I don't want to have all these yelling and stuff around me. So I want to have enough money. That's why I do both. I become a business owner and an investor, and then everything would work out really, really fine. That's what I thought. So a few years later, I founded a company, IT company. We grew a lot and was very, very successful. In the first 3 years, we lost roughly a nice 6-figure number, like 150,000 in the maximum. And then we started to break even. And then in the 4th year, we made a lot of money. We made like 400-something thousand. And that's when I got a nice little letter from the tax department in Germany telling me, hey, now that you're making money, we want to have taxes in advance and a lot. So you get for 2 weeks to come up with a 6-figure amount of money. And I didn't have that back then. And as I put everything in that company and everything was in there, I technically had to file for bankruptcy because I didn't have the cash privately to inject it again in the company. And all together, I lost around 4.5 million euro in the bankruptcy of my company. Why am I telling you that? Because that's when my life began to change. Rather than working all these hours, I was trading already or investing money since I was 16. But now that was in 2010. I now had a lot of time left because you don't work all these crazy 80, 100-hour weeks anymore because what you worked for is completely gone. They took the car, they took the company, they took pretty much everything. And all that was left was an old private computer that I had and around 10,000 in a bank account. And that's when I started to trade again and to focus on trading. Because one of the reasons, or one of the things that I found out is that actually one of the results, or one of the good results in the company was we were buying in US dollar and we were selling in euro. And I managed through trading that I earned another 100,000 in that business year in trading. And then I thought, okay, if I can do that with the things we buy and sell, and it's all the prediction of how does the US dollar move in correlation with the euro, why am I not doing this without all that IT stuff going on and without all these buying of routers and switches and all that kind of stuff? So I took the last 10,000, started to trade. And a year later, I was financially free and I earned more money than I could spend. And then I continued to do so until I decided at the age of 35, okay, now whatever I do doesn't matter anymore. So I can retire. I built a new, smaller companies where highly automated stuff. And that was when I decided, okay, now that's it for me. I don't like to work anymore. I rather travel the world. And that's my story or my life so far in short. This is how it looks like. I got bored after a while, so I decided, okay, if you travel alone to all these fancy places, there's pretty much no one you can take with you because all your friends and family, they are like, okay, it's nice that you suggest to go to Barbados or do you go to the Seychelles or Australia or whatsoever, but we can't join you because we got to work. And then I decided, okay, how about I take what I know and I teach it to other people so they can do the same thing, and then they can start investing, they can start trading and can become financially free. So this is me talking to people and sharing the message. My life today is absolutely phenomenal. Living in Cyprus, have wonderful weather here, yachts that you can go on and have a lot of fun with. Flying private planes. Had a challenge where I traded a Maserati in 90 days. So I took the money for the Maserati and doubled it in 90 days just to buy the car. I make a point out of it. So I live an absolutely incredible life. And all I do is trading a little bit or investing in the right way. And that's not even my biggest achievement, because my biggest achievement is what I can do for others. And that's far more rewarding than whatever money can give you or buy you. So for me, it's more about my clients' returns and how well they are doing than about what I actually make. Not meaning that I don't make money or that I don't love making money actually, but it's far nicer to see how people go from, okay, I don't know anything about the stock market, never heard about it, never did anything with it, to, hey, I'm making more money now than most professional fund managers. So that's one of the best feelings that you can have. So back then I created a mission for myself, financially liberate 1 million people in the world. So obviously I like big challenges. One of the upsides or downsides, however you want to call it, when you have a lot of money and you get bored, you're always looking for new challenges. My latest challenge is has nothing to do with trading or money at all. is to get a six-pack. My wife is very happy that I'm pretty much there, and I'm now looking forward to make an eight-pack out of that six-pack. But this is what you do if you don't have to spend your time in a job or anything else. So I want to share something with you that when you're at the absolute beginning and you don't know what to do, that's very easy to implement and that you can do very, very soon. It's a strategy that I call extraordinary dividends. So what's that about? We pretty much know that the stock market, that's one of the reasons why people are so afraid of it. They are afraid that we go into a recession and the stock market will crash down. And yeah, the stock market does that. That's absolutely normal, and it happens around every 6 to 8 years. We call that the economic cycle. We go from a boom to a bust, and every time we go into a bust cycle, the stock market will go down and people in that stock market will lose money. So if they stay invested, if you're like my students and you can foresee when that actually happens, you invest in a different way and you make money when the stock market goes down, because that's the only financial instrument that you actually can make money when prices go down. Well, that's a different story. This is just something to show you how you actually can benefit from that cycle. And we know that this thing will happen anyway. So if you know it will happen anyway, why don't we just benefit from it? So next time you read about crash and people are depressed and people are losing money in the stock market, for you, that will be the time where you say, hey, hooray, now that's great opportunity. Here's the reason why. Let's imagine you buy a share at 100 euro, US dollars, Swiss francs, 1,000 Swedish krona, wherever you are, it doesn't really matter. And that company typically pays out a dividend of 5%, which is kind of still not enough for our 7% target, but right now we say, okay, 5% is something that we are looking for and that we would like to have. What happens from one cycle to another is that actually the prices will go up again, because yeah, they go down, but then they will go up again, and typically they quadruple. So it's 4 times more between one low to the other low, or from one high to the next high. So that's around 4 times. Now the first thing that happens is your share now that you bought for 100 euro is worth 400 euro. But the best thing is the company still pays around a 5% dividend, but now it's 5% of the actual share price. The dividend yield is always calculated in relation to the actual share price. So the 5% of 400, so first of all, we go from 100 to 400, which is nice, but we're not interested in it, because what we're actually interested in it is that we get the 5% dividend based on the 400, and now that's 20 euro, or it's 20% of the original 100 that we invested. And now we are far better off than the 7% that we actually needed, and we are far better off than the 9% that we get on average, because we now get around 20%. Now that sounds like a funny theoretical concept, but if we have a look, let's say in the German stock market, we have a chemical company called BASF. Now all these prices, the price of 2009, it's not the best price you could get it. I think BASF was available for less than 20 euro for a while, so I took the price. You will never be able to buy at the lowest price and to sell at the highest price. That's absolutely not going to happen. That would be sheer luck. So I took a price where you easily could buy it for a longer time in 2009 after the last crash. So I took 22 euro here. By the time I did that slide, BASF stock price was at 63, so that's roughly 3 times more. Dividend yield today is 4.11%, and based on the original price, that would be 14.7% per year. And this happens when you translate slides only half, so pro Jahr means per year. Learning a little bit of German as well. Now, let's look at a different industry, car manufacturer. So BMW was available for less than 18, today 66. Dividend yield today 5.34%. So based on our original price, that's a 19.44% return, again, per year. And then we, of course, have, let's say, a different sector, just to show it's not one stock or one certain type of stocks where it happens. It's big, namely companies. So we're not dealing with any penny stocks or anything exotic. It's our money. We worked hard for it, so we want it to be safe. So we don't buy any silly companies you've never heard of or stuff like that. So we stay with some of the biggest companies in the world, like Allianz, Europe's biggest insurance company, was available at 65 euro, went up to 216 and above. Dividend yield 4.17%. Based on the original price that we paid, the 65 euro, that's a 13.85% return per year. And that's just Germany, one of the most boring markets where you can invest. We go a little bit to our friends from the island that are leading us to the UK. In the UK, all these prices are historically, because their stock market is far older than the one that we have in Germany, so it's more developed, but therefore their prices are in pence. So 2,000 pence for Rio Tinto in 2009 would be £20. Today we're at nearly £50. Dividend yield 8.81%. You can already see, okay, they obviously can afford to pay more dividends than most German companies. Based on the original price, we're at 21.93%. So we're now at our target of 20%. It's not just a theoretical concept, it's something that works very, very well. Got another company called Taylor Wimpey, was available for 30 pence, today 160 pence, dividend yield 10.44, or based on original price 56.47%. So now after 2 years, you get your original investment out and then some. And then we have Persimmon, available for 300 pence today, 2,000 pence, dividend yield 11.82%, or based on original price 78.33% per year at the moment. You can imagine if you have a couple of these companies and you were able to, rather than putting aside 100,000 in a life insurance or I don't know, 500,000 in a home, and you would have 500,000 these things, and you would get 20,000. Now you earn 100,000 a year. That's typical the threshold where you can live quite okay in Europe. So these are the things that I personally prefer. Just some examples. Very simple strategy, not really difficult. Just wait until it crashes. Look for great companies that pay stable dividends, and then see that you get as much as you can. Now let me share 5 errors quickly that people make in investing. So now we talked about a strategy, how we can do it. Now I want to tell you a little bit about what not to do. The first thing that will mess you up is emotions. So if you either get greedy, you want to have it all, and then you do silly things, you over leverage, or you start to invest in something, although there's no real investment there, all these kind of things. Or if you get afraid and you think, okay, now I bought that, there was a crash, I bought it, but now it went down 5%, oh my God, I will lose it all. So if you get afraid, that's really, really bad, because these emotions will make you do very, very silly things. In many cases, things go down 5% and then they go up 500%, and you will sell with a loss and then be mad at the stock market as it tricked you and went up afterwards. But in reality, you just have to stay calm, do your analysis, and then act accordingly. The second thing is, if you're not thinking long-term, in the first example here in that little strategy we saw, in the first year we get 5%. And if you think about 5% is less than 7, so that doesn't help me at all. I don't do it because it's just not rewarding enough. if you think about it in the longer term, what gets out of these 5% over 3, 5, or 10 years, you realize, okay, now I get like 50, 60, 70% return of investment. That's pretty much unheard of, but in the stock market, it's very, very normal. If you think about why Warren Buffett is one of the richest people on earth, because he bought stocks like Coca-Cola 30, 40, 50, 60 years ago, and at prices that were extremely low, and today he gets probably way more dividend than he ever paid for the share. And these investments triple, quadruple, or quintuple every year based on what he paid back then. So you gotta think in longer terms, not only what will happen tomorrow or next week. The third thing is giving up too early. You try something and you don't follow through because it will take some time. You go in, you look at the stock market, oh, there's no crash today. Well, maybe there will never be another crash. So I don't look at it, I don't care about it. And then like 3 years later, you see, oh, damn, there was a crash. I had great opportunities. I didn't do a single one because after looking at the stock market 2 times, I gave up. And that's the same if you're a business owner, if you want to become a business owner and you go to your first customer, your customer says, or potential customer, and he says, no, I don't like the idea, I don't buy from you. If you turn around and say, okay, that's not perfect, people don't buy, then that's exactly what you get. So giving up too early is a big issue in many, many cases, especially in investing, but not only there. The fourth thing is not being educated. If you wouldn't have a strategy that works, for example, going in after the stock market crash, and you would just go in, let's say, today, and then in 6 months the stock market goes down, and you start to panic because you don't know what's going on, you don't know that things will go up again eventually, or you don't know how to make money when the stock market goes down. If you just don't know anything about it, then that's a huge error and mistake as well. And the last one is lack of financial planning. If you don't know how much money you have, how much money you owe, how much money comes in from different sources, then you have a huge problem in general. I meet so many people that are actually asking for bridging loans because they signed a contract, they had to pay something, and then they realize, oh, I'm a business owner, surprise, surprise, I have to pay taxes, so now I got a tax bill, I need 50,000 by the end of next week. And you just sit there, look at them and think, how can that be? How can you as a business owner not be aware and put away the money for the taxes when they'll come? I just don't get it. The lack of financial planning is a huge, huge issue for many, many people. You can, if you do financial planning, that's great. If you think you should do it more thoroughly, you can get in contact with me. I actually have like a little sheet where you can put in all your data and you see your financial freedom number, how much money you would need in order to retire, or how much money comes in, how much goes out, and all these kind of things. So it gives you clarity and you can use it as a financial planning tool. So if you are interested in that, just drop me a message later on and I'll send it to you. Absolutely no problem. But lack of financial planning, big issue for many, many people.
Hello, my name is Bridget. I met Juergen a few months ago, and I heard about the course that he's offering on learning how to understand the stock exchange and how you can really increase your wealth exponentially from learning some good strategies and approach. And we're on day 4 now. My head is completely saturated with knowledge, but I'm so excited because I feel absolutely confident that what we've learned in here and what we're practicing now is going to make a world of difference when I go back home and apply it, and it's going to help me reach my financial goals.
Okay, that's Bridget, one of my students in Switzerland. So obviously, even the Swiss can learn something about money, although compared to most other parts in Europe, we are pretty much rich. And here's one thing, I'm a trader first. Yes, I educate people, but I only want to work with people that are committed and that do something, because otherwise it's a waste of time. So if you're willing to break out of that hamster wheel and you want to get out and you want to learn something, then I love to work with you. But if you waste my time, then I'll probably be the first one that wishes you all the best, but doesn't continue. So I like people that do what it takes and that don't have all these excuses like I'm too old, I'm too young, I'm too whatever. And you should be ready for a new life, because once you get into the situation where you earn more money than you spend from your investments, that's pretty much where the fun begins. So if that's not you, that's perfectly fine. I am more than happy to just trade on my own. In general, I think that too many people these days are just talking about something. So yeah, I would do, or I can do, or they tell you what great things they do, but they don't get any results. So that's what I want to do different. And that's why I'm so proud of all of these students that make a lot of money. Just some examples here. Natalia from Ukraine, who is doing very, very well. Up there we have Dominic, he was short in Bitcoin, making more than 50,000 pounds of it. Lynn from South Africa on the right, who I think tenfolded her investment account last time we spoke. And Michael from the Netherlands, doing very, very well as well. So you can see I teach people all over the world, and I'm really, really proud of their success, even prouder of what I do. Because yes, just a certain amount of money that makes you happy. If you have 100,000 more, a million more, it doesn't really give you anything. But if you have people that now can enjoy their life, do different things, do their fashion design, or do their sports supporting children, all these kind of things, that's the rewarding part. And these students, or my students in general, they are very smart, because one of the things that I deeply regret is, if you think about that, trading and investing, that's probably very easy for me. Like if I would ask you that, you probably would agree, because I'm doing it now for 23 years, obviously very, very successful. But my clients are way smarter than I was, because they learned from my mistakes. So everything that I did wrong in the last 23 years and everything that I figured out that works is what I tell them. And I wish personally that I would have known that when I was 16, when I started to invest my first money, because that would have saved me years over years in time. So they're actually way smarter than I am, and I'm not even too smart anyway. So it's something where you don't have to study rocket science for years in order to become a successful investor. The moment that changed my life was actually when I realized that I was working my butt off in my IT company and was very, very successful, but eventually I was losing it all. So that's like the silliest thing that can ever happen to you. You give it all, and then for some reason that you cannot even influence, you just lose a huge amount of money, and then it's all gone, and you don't know what to do next in your life. So I was starting over with 10,000 euro, and I realized that I can be financially free 1 year afterwards. That's what changed everything for me, because right now, whatever I do, I don't want to work hard anymore, because I realized that I can reach my goals much faster by just doing something in the right way, which is very, very different from what my parents taught me, probably what your parents taught you as well. And one of my personal highlights privately was meeting Michael Douglas when I was speaking in LA. Incredible guy. I love Wall Street 2 as a film. Golden Gecko, meeting him personally was like one of my personal highlights, and met many people more like Mel Gibson, Mark Wahlberg, John Travolta, and one of the funniest guys ever, Charlie Sheen. He's definitely exactly what he is like on TV and private as well. So he's very, very fun to hang out with. Now, I get that many people are very busy in their life, doing what we do in their profession, working a lot. So if you have no time, that's one of the most answers that I get. Yeah, I would love to do it, but I don't have the time to do it. I just don't know when to do it. So the question would be, can you afford to learn something for 30 days, for example? And it's not 30 days where you have to be like 8, 10 hours or something on a computer. It's just like 15 minutes a day, 15 to 30 minutes a day, depending on what day it is. But is that something that's possible for you? Are you able to carve out 30 minutes a day in order to be able to invest in your financial future and to retire rich, despite all these odds against you? And the second question would be, are you willing to give it a try? Are you willing to be different and to do something different than your neighbor and then reap the rewards for that? And that's basically my message all over the world, no matter if I'm in South Africa, Ghana, in the US, in Europe, or wherever. I keep telling people the same thing. If you're willing to learn something, I'm willing to teach you and change your life and get you the same results that I get for all the other people. Like one of my biggest achievements so far is a student of mine named Katja from Germany, from Bremen. She started out with 1,200 euro and she was able to quit her job 8 months after she started trading. So that got me thinking, if she can do something like that, why not get in touch with as many people as possible, which is why I do all these speaking tours all over the world, which is why I do these webinars to tell people what's possible. And she was far better than I. For me, it took a year and 10,000 euro. She did 1,200 euro and quit her job after 8 months. So I'm pretty jealous about that, but I'm very, very happy for her. Quitting her job, she then got back, but she got a big pay raise, a new like a freelance consultant for the same company. She could choose her customers, all the things where her boss always said, no, 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 can't have it, got a new car and all that kind of stuff. And then was possible when she put in her letter of notice and said, hey, I'm earning now twice as much from trading than I do in my day job, so I actually don't need to work. And then everything changed and she got a great offer and still enjoys working for the same company because now she can do what she loves or what she loves about her job and got rid of all the other things. Now, one of the most interesting things that I experienced is if you have a lot of students and you look at them, you will realize quickly that women are better traders than men. Now, not in all cases, not every woman is better than any man, but in general, women are way better in trading and investing than men. And there's one reason and one reason only, and I typically call it the ego dip. Because when you have a female client, they see something and they understand the concept, they take it, they realize it, the money comes in, they are happy, they keep on doing it, keep on doing it, keep on doing it. And then you have a male client, he gets the same concept, he starts to implement it, the money keeps coming in, and that's fine, but then he's like, yeah, I gotta be better than that. And then ego comes in and interferes with it, and then you have an ego dip where they actually lose half of the money again, and then they realize, okay, maybe there is a reason in the first place when I was successful against I'm not successful now, and they go back to that thing that they did successfully, and then they go up again. So the message here is, if you're a woman, be happy. Your chances to be superior are really, really high. And if you're a man, the good message about it is you now know what to avoid, and if you avoid it, you can have the same great results. Or just remember, then the bank account dips for a while because of that ego thing. As soon as you deviate back to working systems and strategies, you will be fine off again. Eventually, it's never about how much you can make in terms of money, because as I said before, you only can spend that amount of money. And well, I mean, when I see my wife shopping, I always wonder if that's true. However, if you have more money and more money and more money, it doesn't give you anything, because if once you have everything you want, once you live in a nice villa, you have the car that you want to drive, you have a second or third car whatsoever, you can only drive one at the same time. So it doesn't really matter anymore. It's more about what are you able to change and what can you do. And one of my drivers already early on was that I always wanted to be able to support other people without having to think about me in terms of, okay, if I help that person, how does that affect me? Am I able to pay my rent next month? Or am I able to get enough food? Or do I need that money to pay certain bills and whatsoever? So once these things are taken care of, life begins to be a lot more joyful. For example, when I was in Ghana, talking to that lady that has the charity organization, the Girl in Need Foundation, there are a lot of, especially girls that are not able to afford their tuition bills because their mom or their dad or both died. Now they have to be supported by the rest of the family, like some aunts and uncles, and they are not able to come up with the university bills or something. So every year I personally sponsor 10 of these girls, and it's not like in Europe where you have free education anyway in most countries, but over there university is quite expensive, and if you can't do that on your own, you pretty much have a huge issue later in life. So I personally sponsor 10 of these girls every year. There's another, many other things, like I love the Ocean Cleanup project. They recently had some success. They are getting all the plastics out of the ocean, or at least in the Pacific. So their first trial was very, very successful. So I regularly donate money to that. And recently, I'm pretty sure you heard about all these fires and damage for wildlife and things in Australia. So recently, I put the Australian Red Cross on there as well. And these things are typically way more rewarding than the numbers on your bank account. That's one of the reasons why I started with my students an initiative. So it's called Trading for Charity. The ones that want to participate, we have a webinar together and we trade one day where we make money and in a kind of a day trading style. And then we donate that money away for charity. And we will have that as a regular institution. We started it now in January, but we will do that every month. We're currently looking for different organizations and asking people, okay, what cause would you like us to donate the money to? So if you have any suggestions, let me know. I know some of you already did. And then we can have a look at we can give some money away to these institutions in the following month. So that's something I want to do, I want to commit to for a lifetime. So every month I trade a day for charity, and if you understand compounding, the more we trade together and the more money we make, the bigger the accounts will get, the more money we will be able to donate to these things. That's something that I already talked about a little bit. So my biggest regret is that my students pretty genius because they learned from my mistakes. I had to do a lot of mistakes and got some mentors very late in life, and I was in my 30s. So depending on how old you are, maybe not that late. But I would have loved to know what I know today, like 20 years earlier. That would have been a great thing. And one of the things that I'm really, really happy about is working with teenagers. One of them is Juergen. He now got 15 actually, so I already met him for 2 years. But when he started out as a 13-year-old, he was better than 99% of all professional fund managers, and he was way above what he did in the market. Tomorrow I will fly to London, and the day after tomorrow we will have a joint event at the Chelsea Football Club talking about how teenagers can learn investment, can get started. So we will speak there together, and get more and more people in doing these things. So we don't have to leave all that money with the banks. They will, I don't know what they do with it, but it's rather with us than with them. And this is what he has to say about it.
Hi there, I'm Juergen Pallien, public speaker and #1 best-selling author. I just wanted to take time to make this short video for Juergen Pallien, who is an amazing trading mentor. And I would highly recommend that you take his course as well, because the way that Juergen teaches trading is so easy to grasp and you can never get lost. He's always open to taking questions, like no question is silly with him. And due to his help, I've also been able to make 500% back on my investment in 6 months. And that is really amazing. And also highly recommend that you enroll your teams right now, because teens out there, they're really interested about how to make money. And trading is a very easy way to make money. And the way that Juergen teaches it, it makes it just 10 times easier. And I highly recommend that you take part in this course as well.
Okay, so if you're interested, because what I can teach you here is only so much. If you're interested in learning more and getting started, what I can offer you is I prepared an online course where you have 94 video lessons talking about how market works in a step-by-step approach, how to find the best stocks, and how to be way better than the 9% that we were talking about. And you don't even have to wait for the next crash in order to get started. We will talk very thoroughly about risk management, and the course will lead you to your very first investment. If you're interested in that, you can order it via the link down here, bit.ly/24hprofitsoc for online course. This is where you can get it. That will lead you to that website. This is how it looks like. Typical price is $4.97. However, as you took your time out of your schedule today, I'm happy to offer you a discount code on that. So if you're interested, want to go to the next level, just go there to bit.ly/24hprofitsoc. You can enter a coupon code with the words JP Live. It's usually something that I give away when I'm speaking live, but you can have the same €200 discount on that class that I offer the people that come to see me speak. So as a little gift for your participation today, link is bit.ly/24hprofitsoc. The English version is ready. There's a German version in the making. It's not ready yet, but if you get the English version and you want to switch to a German version once it's ready, just send me a message and we will exchange the key, and you can then do the German version as well, or in addition, or whatsoever. This is how you apply it. So once you put that stuff in your basket and you go out, make sure that you apply the coupon, and then it will take €200 away from the price, and you can have it for $2.97. Again, when you're interested in the German version, you can go ahead, proceed, and then just send me a message, and as soon as the German version will be ready, we will exchange that for you. Now, there's one biggest secret, and it's the #1 secret that makes people successful in trading and investing. And I'm really, really happy that I found that secret, and I would love to share this with you. However, as our time is running up, I guess you have to come and see me speaking live, and that's where I will share that secret with you. So if you're interested, because I can only tell you so much in a webinar. Like if you have 60 or 90 minutes together, I just can tell you that much. Well, if I talk to you live and we have like another 2 or 3 hours together, I can teach you and show you much more. So all of these events are for free. You can see me there. It starts in Vienna, like the March tour starts in Vienna on the 3rd, Munich on the 4th, 5th year in Stuttgart, a week later, Mannheim, Düsseldorf, and Amsterdam. and then we will go to Hamburg, Dresden, Berlin. Now you know why it's called Travel Traders, because I'm traveling around all the time. And if you go to my Facebook page, or if you Google Facebook and 24H Profits, or add 24H Profits as a handle, you can see under events, all of these events that are coming up. There will be another tour in April, mainly in the UK. There will be a summer tour, including Stockholm and Sweden. We will be back in Germany probably in autumn, and there might be some US tour and Canada tour, as well as some Australia tour. But these are the dates that you currently can sign up, and we can meet in person, and there I can tell you the #1 secret, as well as any questions that you should have. Okay, that's the at 24H Profits, and that's how you can find me. Now, if you have any questions at the moment, then you can use that little chat window and send me a message so I can answer that for you. And otherwise, I would be very happy if I can see you at one of your speaking events or in the next webinar. Let me know if you liked it, or if you want to cover other topics where we can talk about, and yeah, if I can show you anything more about the stock market so you can have the same opportunities. Otherwise, if you don't have any questions, that's fine with me as well, because I would go downstairs then and enjoy the rest of the evening. Okay, so Eva, I explained everything perfectly easy. Now there's a question coming up. Dan, how long does the coupon last? At least, well, until the end of February, I guess. Probably even, I usually don't change the coupon, so until the end of March, until the tour is finished, that should last. So there's no restriction on that. Okay, you're welcome. Okay. Anyway, I wish you happy trading, lots of success, and okay, looking forward to see you, Christian, in Munich on March the 4th, and looking forward to see more and more of you on the live tour. So thank you very much for your attention today, and I hope we see each other again soon. Thank you very much. Have a great evening. Goodbye.